You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, Market Moose, Mike from The Moose on the Loose. I hope you had an amazing weekend. We're back to talk about stocks today. We are reviewing Alimentation Couche-Tard, ATD, one of my favorite and my second largest position in my portfolio. They reported their earnings last week on Tuesday, and sometimes I'm trying to be like on the dot and talk about it the next morning. Couldn't do it last week, but here's the thing. That's kind of interesting because they reported after the market closed. The next morning, the stock surged by 6%, which is a pretty good jump. Not crazy, but like it's always good to see that the market loves the results, right? So we're gonna dig into that. But first, just a few thoughts on the stock price. I've noticed how investors in general, they tend to be so impatient. They're all going to tell you, oh, I'm investing for the long term. The stock doesn't perform for 12 months, it's crap, and then they get rid of it. It's kind of crazy, right? So right now, ATD is trading around like $70. That's pretty much the price it was trading towards the end of 23. So losing like a year and a half of returns right now. But when you look at the stock price chart in the past, it happened several times. Actually, right before the pandemic, the stock price was trading around $45. And then at the beginning of 2021, so a year later, it was trading like below $40, especially because they failed to acquire Carrefour back then. And I was like saying to anyone that would wanted to listen, it was a great timing to buy. If you want even to go back earlier in the time, towards the end of 2016, the stock price was around $30, and then in the mid 2018 we were like trading around 26. So just to show you that even with a very strong business that did very well over the past 5 and 10 years, you can see there are moments like 1 year, a year and a half, almost 2 years where you're not making any money. Actually, you're losing money sometimes. And it's okay. That's part of the market. We got spoiled as of late with like companies just skyrocketing quarter after quarter, but it's not exactly the reality of all stocks, and it's just normal. Now, going back to the quarter was like better than expected. That's how I would put it. So it was a all right, quarter, I would say good quarter. Like revenue was up 6.5%, mostly driven by the acquisition of Total Energy's convenience stores and gas station in Europe from the late 23. When you look at comparable sales in the US, they were like flat, minus 0.1%, mostly because there were like big winter storms. So in general, they would have probably be slightly positive. In Canada, that was up 2.8%, led by alcohol sales, which was kind of interesting to see, like a 3% same-store sales growth. That was pretty good, especially considering that we are still under a lot of uncertainties around tariffs, around recession. Even the Bank of Canada is just like, I don't know what we're going to do with the rates right now. So decent performance there. And then in Europe, like up 0.2%. So again, another flat quarter for Europe and other. The earnings were up 5%, which was not that bad. Expenses are under control. The company focuses a lot on having good margin. They also got good margin on fuel, which it's pretty much out of their control. Sometimes it's good, sometimes it's bad, but like this quarter was a good time for them in terms of fuel cell, which is definitely something that continues to be a big revenue grower for Alimentation Couche-Tard. Management was also super happy with the food performance in store. So the food continued to grow in the United States. The meal deal promotion did well. It did also well in Canada. So overall, management was satisfied about that quarter. They're kind of like cautiously optimistic. The consumer is still stretched with his budget, mostly after like getting out of like this huge inflation spiral over the past few years. Interest rates are still relatively high in the US, so it has gone down in Canada, but still higher than it was too. So a lot of like and then of course like all the uncertainties around the market and around the jobs. So if you're like working in an industry that could be affected by tariffs, of course you're probably not gonna spend that much these days thinking you may be losing your job or maybe working part-time at one point. So that will affect consumers' confidence in 25. That's going to be like the story for the rest of the year, I guess. And may like even with those kind of like breaks, Alimentation Couche-Tard was able to report some growth. Of course, like they need to find other growth vectors because in 26 they will not have the acquisition of Total Energy, and as I just mentioned, same store sales growth in Europe was 0.2. So might as well just say that it was flat. So it's not going to be like a super like growth powered acquisition at this time, as long as the economy is tough. I mean, keep in mind there are like countries in Europe that are in a recession right now. Germany has been there for I think 2 years already. So it's not like the consumers are like super confident in spending every dime that he has in his pocket. So it's going to be still a tough year in 25 for them. Maybe a glimpse of hope with the talk with Seven and I. So that deal is not dead yet. It's kind of ironic because we started to talk about it in August of last year, and I told you back then, don't get too much excited. Like, it's going to take a while. It may not happen. It may be a lot of noise. Right now, Couche-Tard is still in negotiation with Seven and I, but not that serious. They did not sign an NDA agreement already. So when they signed that, that means that they're getting like very serious about a deal. Before this, like all the information can flow, so that means that they're not that serious, but they're still exploring which stores they would sell in the US to make sure that the deal would pass, for competition, of course. So they are very serious about this. The Alain Bouchard, the founder of Alimentation Couche-Tard, flew to Japan just to show the seriousness of like their offer and what they want to do there. And at the same time, which is interesting, is like 7-Eleven convenience stores are not reporting that much growth right now. They're like struggling and so on. So I think it could be beneficial for both Couche-Tard and 7-Eleven to kind of like combine together to have like a wider network and then use Couche-Tard's playbook to get the expense under control and more growth opportunities down the line. So still looking at this deal. I'm not going to start like doing calculations and stuff because again, I don't want to waste my time and energy on something that may or may not happen. At this point, I trust management's judgment. If they think it's a good deal, it's a good deal. If they don't, if they think it's better to whack out of the deal, well, there you go. I'm just going to trust them on that. They did so great in the past. There's no reason for me to think that they're gonna fail on this one. So over the past few weeks, I've been discussing how to clean up your portfolio and to establish like selling rules. And here's how I would approach Couche-Tard moving forward based on what I've told you. If you missed the webinar, you can go into the show notes. It's there. It's moosemarkets.com/webinar. You'll have like the rules of selling to clean up your portfolio. In a case like Couche-Tard, the dividend triangle, like the revenue, the earnings, has slowed down. Like not the dividend, the dividend is still strong, but revenues and earnings have been weaker over the past like 5 quarters or something. So at this stage, what happens is I'm going to set a deadline. So 2027. Giving them another 2 years to come up with a plan and then executing. Actually, they already have their plan. They already know what they're doing. So now it's a matter to see, are they able to be good at execution? The recent quarter tells me that they are good because earnings are back up. The revenue will still slightly up as well. So even though they are operating in a tough economic environment, they're still able to put their plan in place. So that's the first thing that I'm going to look at. And then moving forward for the few following quarters, what will be important is to see an improvement in the dividend triangle. So I'm expecting more revenue and more earnings growth. And of course, when it's time to increase the dividend, I also expect another generous increase. They're still at a space where they are able, if they believe that they can turn things around and start growing again, they should be able to offer like a high single digit to double digit dividend growth. They have the cash flow to do it. Now it's more a matter of like which kind of signal they will send the market with their dividend. And in the meantime, I'm going to look at the revenue and the earnings. If the situation completely goes south and it becomes like a disaster, the 2027 timeline may be shorter, but at this stage, it's important to give them some time to turn around and apply their plan, which this is exactly what they're doing. So, right, Moose, that's enough for today. I hope that you have enjoyed this one. We're going to talk again tomorrow. And until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy this show and do your due diligence after it.